All right, this company, Eric Driving Enterprises, they want to establish a petty cash fund as of January 11th, 2019. They set up the fund, appointed the office admin to be the custodian. And they issued a check for 175. So we need to create a journal for that initial transaction. So in this situation, we've then credit to cash because we're actually cutting a check, and we're debiting our petty cash to set up the fund on our balance sheet. The next part of this transaction says, as of January 31st, the balance in the petty cash box was $30, and the total of the receipts of the four items submitted was $149. So we need to determine the balance of the petty cash fund based on the receipts provided. And then we also need to prepare the journal entry to replenish the petty cash as of month end. So based on the receipts provided, we expected to have $175. Okay. However, the total of the receipts total 149. So the balance of the two should be 26. However, we have $30 in the account. So in this situation, we actually have what's considered an over. We have more cash than expected. So that's actually a revenue pickup. Okay, so obviously we reimburse somebody not enough, or somebody just said, here's the receipt, record it, but I don't want my $4, whatever that might be. So what we're asked to do then is to prepare the journal entry. So these are all expenses that we need to record. So we've got a debit to our 4 expense accounts to match the receipts: $89 delivery, 22 postage, 13 office supplies, and 25 travel. We need to cut a check for $145 to cash because the 145 plus the 30 will get us back to the 175 expected as per our balance sheet. So the check amount to cash should always be the difference between what's in the GL versus what's actually physically in cash. And then the cash over or short will be the difference. In this situation, we were over by 4, therefore it's a credit. If we're short by, say, $1 or 2 or 3, then it would be a debit for that amount based on this little box here. Last part of this question says, based on the response from part C, determine if the cash amount is short or over. So in this situation, as we said, the cash is over. We've got more cash than expected. The last part says, management decided to increase the amount of petty cash because they seem to be running too low. So they suggested doubling the petty cash fund balance. In this situation, it is just like when you create the petty cash, it'll be a debit to petty cash by 175. So now your petty cash balance on your balance sheet will be the original 175 plus the 175. So you're expected to have 350. And therefore you need to credit cash. And this is to increase the petty cash fund. Hope you found this helpful.